and I'm the principal partner in the Hawkins Ash Housing Division. Hawkins Ash has been doing fee accounting for housing authorities for over 50 years. Today, I'm going to go through a financial statement overview. Feel free to contact me with any questions you have on this topic or any others. So today, I'm going to touch base on the information of a financial statement. I will go over understanding accounting basics, the chart of accounts, and the parts of a financial statement. Let's start with the basic accounting equation itself. Assets minus liabilities equal owner's equity. The assets include cash and investments, accounts receivable, prepaid expenses, and fixed assets. These are all items that add value to your housing authority. These can be both current and non-current. If it's current, they should be received within the next 12 months into cash. Liabilities, on the other hand, are items that are owed to the housing authority. For example, any loans, accounts payable, which are bills to be paid, and any other accrued expenses like pilot and security deposits. This also has both current and non-current. If it's current, that means that the housing authority will be paying these out to who they owe within the next 12 months. Equity, also known as net position, is the net worth of a housing authority. This includes your invested in capital assets, which are your fixed assets, less any depreciation, less any outstanding loans. You could also have restricted equity, and this is for anything that's restricted by an outside source. And then what is left of your equity is your unrestricted, also known as your working capital. Current year activity that flows into your equity at the end of the year are your revenue and expenses. Revenue is any income that is generated from both tenants and non-tenant sources. Expenses would include admin, tenant services, utilities, maintenance, protective services, and other general areas. Now let's take a look at the chart of accounts. The account structure can be set up in multiple different ways. Your housing authority account structure should at the very least include the program or the fund number, the HUD accounting number, and any extension of the account code. Let's take a look at the example on the screen. By looking at the structure, I know that this is a public housing expense account for maintenance electrical contract costs. I know all of this from the structure itself. The 01 represents public housing fund in this case. The next single-digit number can be either a 0 or a 1. The 0 would tell us that it's a balance sheet item, and the 1, like in this case, represents an income statement, either a revenue or an expense account. The next two sets of 3 digits are for program IDs or AMP numbers. In most cases, these are 0. But in the case of an AMP, this would be in one of these sets where you would distinguish between your AMP numbers of the public housing fund. CFP is also an area that would use these digits to distinguish between CFP years. The next set of 4 is one of the most important set of numbers. This is the account number itself. In this case, a maintenance contract cost. The last 3 digits are the extension designated that, although it's a maintenance contract cost, it's for electrical only. Account categories can be different, but from the HUD account categories, typically assets are 1,000 accounts, liabilities and equity are 2,000 accounts, revenues are generally 3,000, and expenses are generally 4,000. Like in the example on the previous page, the 4 started the maintenance contract cost, which designated that it is an expense account. These can and do vary by housing authority, but these are the original HUD account categories. Now that we have gone over some of the basics, I want to highlight for the balance sheet, also known as the statement of net position. Assets are the total of the cash, receivables, and fixed assets that your housing authority has. Liabilities are how much your housing authority owes overall. And your net position is the equity that you have accumulated over time. So if a housing authority was to receive all of the cash that they were owed and pay out all the liabilities that they were owed, your equity is what would be left over that you would have in cash. Some highlights from the income statement or statement of activities. The revenues and expenses are what is reported in the current period and the current year. The total ending of that is the profit made or lost in that fiscal year. This will then flow into your equity on the balance sheet. This is the area your board typically should spend most time reviewing. This would give them a good picture of revenue generated versus the expenses paid out in that fiscal year. The income statement should also contain the budget. Again, this is a good way for the board to be able to compare actual versus what they approved on the budget for the year. This covers the overview of financial statements. Remember, Hawkins Ash is a full-service CPA firm, including tax, audit, payroll, and fee accounting services. If you would like to get a hold of our firm, feel free to contact me at any time. Thank you for your time today. Have a good day.